Hey, how you guys doing? Good evening, good evening. Russell Moore coming to you again from Dedicated to Financial Literacy. Um, I've been on a series. By the way, please hit the subscribe button, hit the notify, so you can get more content in the future. And if you like the content, give me a thumbs up, thumbs down, thumbs up, whatever, whichever you prefer. Okay. Um, I've been on a series talking about charts and technical analyzing. And so you can watch the previous video to deal. And I talked extensively about a line chart and what an uptrend and what a downtrend means, so that you can identify um, when a stock is going a certain way. Okay. Now, I have not gotten into all the different patterns and different trends and like that. If you're this is for a newbie, a basic understanding. Okay, but it'll help you in when you're just starting. Okay, I would encourage you. um, there's a very good channel called the Trading Channel. I believe that's the name of the Trading Channel. It's a very good channel, and he's very good at explaining charts and all of that kind of stuff. So I want to refer that. I'm not a hater. If I see a channel and it's really good, I'll definitely refer them and bring it up to my audience. Okay, to the people that are watching my channel. All right, so let's head into this. And today I want to talk about real quickly. This is just a brief explanation, okay, of candlestick charts and how they function. What is a candlestick? And it has a Japanese origin. I'm not going to go into the history of it. You can Google that. I want to get right into this. And so, but this is one of the type of charts you will see that you'll have to become aware of, and you want to know about them. Okay, you want to know what the candlestick represents. All right. Now, the thing about candlesticks, um, candlestick charts you can have, and this goes for any chart. You can have a 1 minute chart. You can have a 5 minute chart. Uh, you can have a day chart, a week. We're going to call this a day. So each one of these candles represent a day. Okay. And so this is day one, day two, day three, day four, day five, day six, day seven. In fact, why don't I write that? Day one, two, three, four, five, six, seven. So keep that in mind, that each one of these candles represent a day. Now, it could be a minute. There are minute charts. It could be 5 minutes. If you're just starting out, I would not suggest you start trying to do the minute and 5 minute charts. Um, we'll just say this is a week. All right. Now, first of all, if you notice, there are two colors. There's green and there's red. Green represents the market is going up. For that day, the market was green. You'll hear that term, newbie. You'll hear green or red day, green or red day. It was going up. It was trending up that day. The red means down or a bearish candle. Okay, so the green is a bullish candle, and the red is a bearish candle, meaning going down. The market was going down. And because this is a day, remember, these are days, these are not minutes. That means for that day, we had a green day. For this particular stock, it went up that day. The next day, Tuesday, it went down. Wednesday, it went back up. Thursday, it went up. Friday, it went back up. Now, there's no trading on Saturday and Sunday, so we'll just say Monday, Tuesday of the next week. All right, so this is 7 days. Now, if you notice on the candlestick, you'll see these lines. Notice these lines. These are called, every candle has a wick, right? You light the wick. These are wicks. I'm going to explain them in a minute. We're first going to deal with the body of the candle. So let's just say this is Monday morning and this stock, we'll call it Apple. Apple, I believe Apple is APPL. All right, Apple. And on Monday, the green candle opens at the bottom. It opened here. Okay, I want you to see that. This is where Apple opened, right here. It opened right about here. So whatever the price is, say the price is 163. It opened there, 163 per share. Okay, this is where it opened. But then it went down. It went down from there. This wick represents it had a pullback for a minute. There was some selling that went on. So it's probably, say it went down to 160. This represents it. There was a reduction in price because it went down, right? But then we got some people in the market and said, "Oh, wait a minute." A lot of people came in and said, "We want to buy more shares." So then it goes back up to the open and goes all the way up. And now it comes all the way here, and this is the high for the day. That's the high. This wick represents the high on the green candle. So say this is about 175. All right. So it went from 163 at the open, went down to 160, and then it went all the way back up to 175. So that's the high for the day. But then it came here, and this is where the candle closed at 170. You see how that happened? It opened here and it went down. It started selling off. But then the buyers came into the market and they began to buy, and there were more buyers than there were sellers. The buyers outnumbered the sellers, and it went all the way up. But it went so far up and it established a high, 175. But at the close of the market that day, it dropped right at the close, and it ended right here at 170. Does that make sense to everybody? Now let's look at the red candle. It's a bearish day. The next day, it was the opposite. It opened here. Say it opened at once. We'll just say one, because of pre-market, it's a little lower. We'll say 169. It opened at 169. And then the buyers came and it went up. And it got to 173. But oh, the sellers said this is going to be our day. And so a sell-off began to happen, and it went all the way down, and it established a low right here of 155. So Apple dropped all the way to 155. So this is the low for the day. Well, the buyers said, we still going to fight. And so by the close of the market, it came up here and it ended at around 160. So you see how that, but the reason why it was a bearish day, because it was lower. It was lower than the previous. It was lower than the open. That's what I should say. This, when it's a green day, a green candle, it's higher than the open. It closed higher than it opened. When it's a bearish day, it closes lower than it opens. Does that make sense? I'm going to say that again. On a green day, when the candle is green and it's a bullish day, it's because it closed higher than when it opened. So the market opens, say it opens in Southern California, it opens at 6:30. So say it opened at 163. Well, it closed at the end of the market that day. It was at $170 a share. So that means it went up. It was a green day. It was a bullish day. It closed higher than it opened. But the next day, it opened at 169, but it closed at 160. So how do you determine whether it's a bearish day or a bearish candle? It actually closes lower than the open. All right? I believe I've explained everything concerning a candlestick. Now, there are certain trends and certain things you can look for in the candles. There's certain patterns. We're not going to go over that right now. I just wanted to give you the basics on what candlesticks mean and what they represent. I'm going to say it again. Let's go over to this day. This is the third day, Wednesday. Why is this green? Well, it opened here. It opened here, but it closed higher than the open. When it opened, it went down first, sellers. But then it began to get momentum and buyers began to come. And then it had a high. This is the high for the day right here. This is the low for the day. This is the high. But it eventually closed right here. Next day, it opened here, and look how far it went down. That's the low. But the buyer said, no, 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 we're going to buy, we're going to buy, we're going to buy, we're going to buy, we're going to buy. And now you have a high for the day. And then it settled here, and this is where it closed. Same here. It opened here and then dropped, sellers. But because it ended up being a green day, buyers begin to overtake this stock that day, and it goes all the way, and here's the high, and it settled here right before the close, and at the close it was here. Next day it opened here and went up. It opened and went up. This was the high for the day, but it was a bearish day. So what happened? It came back down. The sellers began to overtake. The sellers overtook, and it went all the way down here for a low. This was the low for the day, but it settled here. This is where it closed. Why is this a bearish day? I'm going to say it again. Why is this a bearish candle? Because it closed lower than the open. That's what determined whether it was a bearish day or not. It closed lower than when it opened. This closed higher than when it opened. That's why it's a bullish or a green candle. All right? Anyway, that's it. That's the basics on candlesticks. All right? Hope you learned something. Love you guys. Hang in there. Keep trading. Keep investing. What do I always say? You cannot earn if you do not learn. You cannot earn if you do not learn. Have a great one. Talk to you later.